Hello, I'm Richard Hunter, Head of Markets at Interactive Investor, and welcome to our look ahead to the week commencing the 18th of May. As has become the case these days, it's been another interesting week and a lot for investors to take into account. In the US, we've got some fairly horrendous unemployment numbers going on at the moment, an unemployment figure of over 20 million and also an unemployment rate of around 16%. On the top of that, there have been a couple of dotted cases of resurgence of the coronavirus where restrictions have been eased somewhat, which has caused some concern for investors. We also had some comments from the Federal Reserve Chairman Jerome Powell that perhaps the government needed to get involved again to save the US economy on the basis of some fiscal financial firepower. And also, of course, that's led to the recovery when it comes. What shape is it going to be? There's an alphabet soup going on at the moment as to whether the recovery is going to be V-shaped, U-shaped, L-shaped, W-shaped. There's even been talk more recently of a Nike swoosh or indeed a square root symbol. So take your pick from that. In the year to date, indexes much the same as they were last week. The Dow Jones is down 17%, S&P 500 12%, Nasdaq down just 0.3%, and our own FTSE 100 down 23%. So turning to next week, we've got a few interesting corporate announcements coming up. The first one is half-year numbers from the tobacco manufacturer Imperial brands. Now the question here is one of the dividend. They're currently yielding just over 12%, and there's two schools of thought. On the one hand, there's a possibility of a dividend cut on the basis that their debt levels are quite high. On the other hand, they've recently announced that they've seen no material impact from COVID-19. So certainly worth watching out for any dividend announcements for Imperial's. Shares down about 26% over the last year. Also next week, we've got some full year numbers from Marks & Spencer, having a very tough time at the moment. As we know, the shares are down around 66% over the last year, including their relegation from the FTSE 100 in September 2019. And it's going to be a question of looking at the usual two strands for Marks & Sparks. On the one hand, usually positive, we've got the numbers coming from food. On the other hand, of course, usually less positive, the numbers coming from their general merchandising. Finally, next week, we've also got full year numbers from Burberry. The matter of interest here, of course, is its exposure to Hong Kong and China, both of which seem to be returning to some kind of economic normality. The question is whether Burberry has yet seen any benefit. Those shares are down around 36% just in the last 3 months. Thank you for watching. Have a great week.